And now let's get the latest in the commodities market with Dr. Efroma Wokolo, Assistant Vice President, Financial Derivatives Company. She joins me via Zoom. Great to have you on the show. Good morning.
Good morning, Larry.
So we're seeing, yeah, great to have you. So we're seeing the same old movement again, de-escalation leading to lower oil prices, then escalation. So it seems like the U.S.-Iran deal, seems that's fading, at this point. What are you seeing?
Well, with what we are saying, I think it's going to take longer for this conflict to be resolved. Because right now they are seeking for compensation. The US is asking for compensation. Iraq is asking for compensation. So I think there's going to be a kind of loggerhead between these two countries. And if this happens, I think the market is beginning to factor in that there's going to be constraint. That's why you see oil price almost hitting $90 per barrel this morning. So I think the better question is, how is this going to affect us as a country, Nigeria? We have both the positive impact and the negative impact. While we have seen PMS price at pump price at 1,210 naira, it means that in the near term we might likely see PMS price increase again. So that's what we are saying, and the government is still going to benefit from this, and is going to, hopefully it's going to impact the Naira. As we have seen, Naira is beginning to depreciate, and Naira is depreciating. We should not forget that even though oil price is high, most of the sales that the government have done so far are forward sales. So I think that is why we are not seeing that impact the Naira. The Naira continued to weaken. As at yesterday, it was 1430. And that 1430 simply means that the demand is high. Demand for dollar is high, and the gap between the parallel and official market has widened to about 66 naira, and that could give room for arbitrage or round tripping. So I think that even though the oil price is increasing, we have negative. It's a paradox for us, both negative and positive. So, but I think that the negative way more. It's going to weigh more on us as a country. Then hopefully we think that if this is resolved, but we don't see this resolving in the near term, what we are going to be seeing is often, I'll call it a yo-yo. We are going to see like a yo-yo dance of, yes, up and down, the escalation. That's what we'll continue to see until this issue is resolved between the US and the.
It's quite interesting. At some point, last week we did see oil prices fall for the trading week, down about 8% for Brent, 11 for WTI, and it was on the back of de-escalation. So it's like you can't even rest on de-escalation at this point, because just a week ahead you're getting escalation again, and the U.S.-Iran deal there seems to be fading at this point pretty fast. But talking about the FX market, you did say the rates in the official and the other market there, we're seeing that spread widen again. Do you see the CBN intervening this week?
Well, the CBN has been intervening all along. And the July data that we saw showed that FX inflow increased by 59%, and this is basically from within local dollar supply and the CBN intervention. If CBN had relented in intervening, I tell you, the Naira to dollar would have hit almost 1450 or even 1500. But the CBN has continue to intervene, but it's just that the demand is high, because this time we're entering the Ember month by next month, and so traders are beginning to import. So there is demand for FX to import for Christmas season, and also international students are resuming, so parents are already sourcing for dollars. So the demand is outweighing the supply. So we are seeing this gap, and I think that it's temporal anyway. The gap is temporal. So we know that after this pressure for school fees and the the Naira may rebound in the next.
Right. So I guess it's that season. Yes, again where demand rises for the dollar there. But let's look at inflation now. I believe you have your forecast set. That's for the month of July. I believe the number is 15.87%. That's kind of like an easing there.
It's an easing, but it's basically statistical. I say statistical because we're talking about headline inflation. Headline inflation, I always say, is historical, comparing this year and last year, how the CPI has fared. So we're going to see the base year effects impact the inflation numbers we are going to see. So that's why we're going to see a decline. So if you look at some variables that we usually measure, so looking at last year and this year, you see that Naira last year traded at about 15.54 to $1, and now it's trading about 14.30 to $1. So that's what we are seeing. And also the money supply growth for 2025 July traded at about money supply growth was about 10.2%, but July this year money supply growth is about 13.6%. So showing that the last year is better than this year. So if you look at commodity prices, I'm going to just take very few commodities. If you look at the price of garri in 2025, it was about 32,000 naira, and this year is 20,000 naira. So I'm comparing July last year to July this year. So the price of rice last year was higher. The price of rice last year was 87,000 naira. This year is 65,000 naira. The price of flour was 65,000. This year is 54,000. So this base year effect. So prices are cheaper this year compared to last year. So that's why we'll see. But if you look at month on month, which shows a true picture or reflection of what inflation number is truly is going to be, is showing that there will be an increase. There will be an increase in inflation, month on month inflation. Now what does that mean? It means that prices, comparing prices in June and prices in July. So if you compare prices in June and July, you see that prices in July is way higher than prices in June. So that's why we're going to see
this
increase.
I guess we'll be expecting that data. It's one thing for prices to drop, and it's another thing for consumers to be able to afford whatever that drop is at this point. We'll be looking out for that data. Thank you so much, Dr. Fuma Wokolo. She's the Assistant Vice President, Financial Derivatives Company. Thank you.
Thank you for having me, Dad.